Hey everyone, it's Amit. So there's a lot of positive news that's basically taking place in the housing industry. So for example, lumber prices continues to go down. The number of people that are employed in this sector continues to go up. The number of housing starts continues to increase. And generally speaking, there is an increase in the amount of supply of homes that are listed for sale. So this is all generally speaking pretty good news. And one may naturally assume with all of these positive factors taking place that there should be some level of stabilization in home prices in the not too distant future. But in this video, what I basically want to outline why I think that this may not necessarily be the case, and it's going to take a lot longer for these prices to stabilize. But before I talk about what this factor is, don't forget to gently tap the like button for the YouTube algorithm and also subscribe to the channel and ring that notification bell, and let's get into it. So let's just talk about some of the good news first, right? The good news is primarily around housing supply, and the amount of houses continues to increase. Okay, so based on a recent study, U.S. homes for sale climbed about 6.7% in early June relative to the same weekly period in the month of May. Okay, so one may naturally assume that now people are willing to tap into those significant equity increases or the increases in the home prices since the commencement of the lockdown. On average, home prices have gone up about 20% in the last 12 months or so. So perhaps people are now willing to tap into that, put their homes on the market, and this will generally increase home supply. Any increase in home supply is generally a benefit or a welcome respite to the home buyer. Okay, there's a lot of bidding wars that are happening coast to coast, and it's being driven by a variety of factors, including very low mortgage rate, a certain level of increase in job flexibility, so people being able to work from various different places and essentially being more mobile due to that, and of course this whole scarcity of inventory fact pattern that's also driving up a significant number of bidding wars. However, with all of that said, and this increase that has taken place, there's number of homes that are actually open or listed in the market continues to be at historically low levels. For example, inventory levels are still down about 38% from a year earlier and are now at near historic lows. And due to this, the median home prices continues to shoot up, right? So the median home prices has now gone up by 19% in April, and the average price of a home is now at $341,600 according to the National Association of Realtors. The Case-Shiller numbers were recently out. They were out just about a week ago, and that showed a 15% increase in home prices just year over year. Okay, so the data is definitely reflecting a significant and consistent increase in home prices. And there are lots and lots of experts now, okay, experts that are predicting that for the back half of the year, on average, there's going to be about a 10% increase in home prices from the lofty levels where they are now, okay? And some experts are even saying this number could be as high as 30%. So what's driving all of this? It's not lumber prices, right? Because that's coming down and that's proven. It's not shortage in labor. And as we talked about, supply continues to increase. So it's not any of these factors that's resulting in such a large increase in home prices. Now, if you are in this home buying kind of frame of mind, right, one of the key things that you need to know is that over 36% of homes that are currently being sold are being sold in cash offers, okay? So think about that. When you're talking about buying a home, it's not necessarily like going to a grocery store, okay, or you're going to a store where you can pick up some apparel. You're talking about homes. You're talking about hundreds of, potentially multiple hundreds of thousands of dollars in cash that is basically exchanging or transacting hands. Who's got this much cash, right? I know there's been a significant increase in personal savings levels since the commencement of the lockdown, but with that said, we're talking about hundreds of thousands of dollars that is effectively exchanging hands. So where is all this money coming from? And the short answer to that, as it generally is enter the world of high finance, okay? And more specifically, when I'm talking about high finance, I mean private equity type of companies. So what are these private equity companies, okay? So private equity companies, previously, they were focused on basically being vultures and attacking companies, okay? So what they would do is they would take public companies and they would potentially privatize them, or they would look at companies that they perceived did not provide enough value, or they could effectively provide more value, they would buy those companies, they would strip all the cost and all the value out of it, try to show some increases in profit for that given company, and then spin them out in a variety of different ways. Okay, so they would spin them out as a potentially making them go public again, or they would sell them off to a different company and realize significant gains on those types of operations. But now what these vultures are also doing is they're focusing on the home space. Okay, so home buying, home renting, and they've created these massive leasing arms that they're also very focused on. And why are they doing this? Well, the short answer is when you have a space or an asset class that has generated over 20% returns in the last year or so, it becomes a very compelling avenue for all of the world of high finance to basically focus in on, such that they can realize some of these returns. These private equity firms are buying properties sight unseen. Okay, so frequently if you're in the market to buy a home, what you'll see is, oh, this home got sold in a day, or it got sold in less than a day, or there were multiple offers on that given day when the house went on the market. And it's essentially these private equity firms competing against one another and putting in these massive cash offers and being very compelling propositions to a given seller. And previously, these guys were more focused on like multi-dwelling type of homes. Okay, multi-dwelling homes is just a different way of saying they're focused on like apartment buildings. But these companies have now become increasingly focused on single-family homes, which is generally a big and broad swath of the market, and where prices are going up quite significantly. Now, what these private equity firms are also doing, they're also focused on the short-term rental game. Okay, so they're using platforms such as Airbnb and VRBO in order to get short-term rentals, because quite often what happens is through these short-term rentals, they're able to realize an even more significant profit margin relative to some of the long-term rentals that they would have to do previously, or potentially having to flip properties and things like that. And we're talking about large amounts of cash here. Okay, so a recent filing reveals that Dublin, Ohio-based ReAlpha is seeking to spend as much as $1.5 billion, including debt, to buy short-term rentals at an unprecedented scale. The money would be used to purchase roughly 5,000 homes, said the chief executive officer. So that's effectively what a regular buyer is going up against. They're going up against this relatively unknown company, right, that's looking to buy over 5,000 homes. Okay, so there are some massive players in this space. You got companies such as Blackstone and Carlyle and KKR Group. These guys are not looking at 5,000 homes. These guys are looking at tens of hundreds of thousands of homes effectively, because they have significantly more capital on hand. So supply is still tight. You got these cash offers that are flooding in from these private equity firms, and then you have sellers who are just like, well, I can get pretty much whatever I want, so it's just going to continue to raise prices for a foreseeable future here. Okay, and then you have now this eviction ban that's potentially going to get lifted on July 31st, and there was potentially this notion that, hey, there may be an increase in the number of properties that are going to be on the market, but you also got to realize that with these vultures swarming with these deep pockets, they're going to be picking up these properties en masse. Okay, so as always, what can you potentially do around this? Okay, so I just did a video, just go ahead and check that out. It basically talked about 18 different strategies that can potentially be deployed such that you can get into some of these houses, or at least make your offer more compelling relative to some of these cash only offers. Of course, if you have enough cash in your hand to compete against these guys more effectively, that's great. But if you don't, those 18 different strategies that I've talked about in my prior video, for which I'll leave a link to up above, as well as in the description below, definitely go ahead and check that out. Personally, of course, if you can wait, right, it's just a waiting game. If you can wait for a reasonable amount of time, you're definitely going to be in the best position. Okay, because these prices are going to normalize at a certain point in time. You're not going to get these 20% type of increases. Maybe these vultures will reduce their amount of interest in their particular space and find better things to potentially do. So what are your thoughts about this? Okay, do you think that these private equity firms and these high finance type of people are not going to continue to drive up prices for potentially a long period of time here? What are your thoughts? Include all of that in the comments below. And of course, if you found value to all of this and you enjoyed the contents of this video, don't forget to smash the like button for the YouTube algorithm, subscribe to the channel, and I'll of course see you in the next one.